Turnover in the cannabis industry isn't anything new. However, with the pandemic and now the great resignation, it's becoming even more difficult. So how do you keep top bud tenders, as well as talking about MedMen appointing their third CEO in 2 years. Canopy Growth had to shake up their entire management system after weak earnings. So we're going to dive into some employment results. They're seeing at least the Canadian cannabis industry plunging. Diving into all of that coming up.
It's only entertainment.
Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business podcast. So according to this MJ Business Daily article, 6,000 people lost or left their jobs at 20 different cannabis companies, even as those businesses received more than $140 million in the pandemic-related wage subsidies to try and retain those people. They still left. So we will find out why. So again, 6,000 people left their job at licensed producers. That's 30% of the estimated 20,000 positions. And then there's some layoffs. So MJ Business Daily, they tracked some of the layoffs that occurred in 2020, and the data accounts for only some of the industry job losses. Some of the finger pointing is saying that some of these companies tried to expand too quick. So they didn't really know what they were doing. They took steps to try and maybe destroy more cannabis than they were able to sell. And then some of these companies poured a lot of money into cultivation, overproducing, and then had to lay off some people because they realized that they were making too much. So they had to kind of figure that out. So there's been a lot of growing pains, if you will. Not everybody's losing, though. You've got High Tide and Pure Sun Farms, Afria, and Valence Company all gaining workforce and employees. But, of course, there's exceptions to the rule. I guess what we're seeing from the data is that a lot of people are leaving. The big losers, Tilray, they didn't respond for a comment on here, but Tilray and Sundial, Aurora, Canopy, they all lost a ton of people that year. Aurora, for example, they had 1,000 employees in 2018. They hired 3,000, and then now they're back down to like 1,600 people in 2021. So figuring out, just how many people they need the hard way. The Canadian market is interesting, though, because of the easy access to capital, whereas in the US, you don't have that. But only 14%, or rather, no one company in Canada owns more than 14% of the market. I find that fascinating. So MedMen, they're in the US, obviously, one of the MSO darlings, but Canopy up in Canada having to shake up some of its workforce. So they've been struggling, obviously having to write off a lot because of overproduction, building too many greenhouses. And so the CEO said that the decisions reflect the management and board's vision for building a best-in-class organization, well-positioned to deliver long-term growth and shareholder value. Well, when? Because you've written off $3 billion and now you just had to shake up your management so that you're not instilling confidence in me. I don't know who David Klein is as CEO, but you're not going to get any of my investment money anytime soon. So until you guys can actually do something, rather than continuously have like press releases like this, when your founder didn't do you any favors by having malinvestment, at some point you guys are going to be kind of the AOL Time Warner, where your true market value is a fraction of what it is, if you can even survive, which I don't really think Canopy Growth will be a name 10 years from now, unless they can start making money. And it doesn't look like they really know what to do with it. So they're struggling, and it's painfully obvious. MedMen, I've said, is an absolute dumpster fire. They're going after the third CEO in 2 years. And so this is one of those companies where there's absolutely no oversight. The initial founders and CEOs ran the company to the ground, and they probably should have just cut their losses and tried to start over with a different company entirely. But they're going to try to rise from the ashes. I don't know if it's going to work. In the end, no one cares about MedMen, the brand. People will go to cookies because of the cultivars that they offer. Nobody cares about the name and the brand MedMen, like nobody. I don't see anybody running around like, I love what MedMen offers. They don't care. They're going to be buying it online. So they're never going to see your bud tenders. They're never going to see your end caps. They're never going to walk into your store. Over 50% will order online, and the name of your store means nothing. So unless you can pivot to stay relevant, I don't know if this company is going to be around in a couple of years. The way that they're going, it doesn't really seem like they got anybody at the helm who knows what they're doing. Or at least can have a vision of how to remain relevant long term. I just don't see it happening. Nobody cares about retail brands. Look what happened to Sears. Like Sears was huge. Nobody cares about Sears. Sears bought Craftsman, a really, really well-known tool, and then they made it all plastic, and now it's garbage and no one buys it. So when you don't understand and you're just looking at cost cuttings and you don't understand the actual market, you're going to destroy it. And that's what a lot of you're seeing from Tilray all the way to all these other companies in Canada is management not having a clue what the actual cannabis industry is about. And therefore they have no vision or direction. There's short-term. And that's with every publicly traded company. How can you have a long-term vision when your CEO stays on average 4 years? It just doesn't work. That's why it's really hard to invest in these public companies. I day trade. That's why I have an automated algorithmic hedge fund. Download our app, by the way. It's called Toro Alerts. Download that. It'll send you alerts on when to buy and sell equities. We're going to be adding crypto and options. It's called Toro Alerts. I don't invest, I trade, because none of this makes any sense to me. This is a technical market. There are no fundamentals. Fundamentals have been dead for a long time. MedMen's dumpster fire has been for a long time. And so I think what we're just kind of seeing is the growing pains of an industry trying to pretend to be mature when it's not. It's obvious it's not. I wouldn't even touch the psychedelic market, with your money. I think, when you're talking about individuals from the cannabis space that have left, the previous CEO of Canopy Growth going into psychedelic space, forget about it. There's no revenue being there. It's just pumping that up with press releases and absolutely nothing with the bottom line. Even with Canopy, they didn't know what to do with the money. Malinvestment of $4 billion, like, it's crazy. Absolutely crazy. So I don't expect anything to change in terms of this whole wave of quitting, with the Great Resignation. I don't really see that stopping. I see a lot of growing pains, and it's going to put a lot of emphasis on the culture and not so much with, corporate cannabis. So that's good news. Maybe we'll get some more terpenes and things that people actually want rather than just big corporate cannabis. With that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.